All right, folks, Kamari Ellis here. Another day of the Investing Basics Challenge. Today, day number 20. 10 more days to go, but I got more for you coming after that. Today, we are going to talk about fundamental analysis versus technical analysis. What's the difference? That's another question I kind of get a lot, and just wanted to answer that. There's a big difference between fundamental analysis and technical analysis. There are actually two different schools of thought when it comes to analyzing any kind of investment. The real big difference is fundamental analysis usually includes economic factors. If we're talking about a stock, it may include what the stock is doing in terms of what the company is doing in terms of revenue, what the company is doing in terms of debt, what the company is doing in terms of new developments. You're looking at your financial statements a lot when you're doing fundamental analysis on a stock. And if it's a different kind of investment, say a bond, you're still looking at the overall structure of the company. Now, technical analysis, a lot different. It's more concerned about price history. It figures everything is going to be factored into the price history, whether it's good or bad, going up, down, or sideways. So, a lot of times when people think about fundamental versus technical, they think of chart versus financial statement. So the chart would be for the technical analyst who's looking at different pricing patterns, how it hit different lows or different highs, how it reacts certain times of the year, which they might call seasonality. Don't want to get too technical, but a fundamental investor will look at financial statements. So they're looking at past years of income statements, past years of balance sheets, past years of cash flow statements. So it really is a difference. The technical analyst doesn't feel that they need to look at any of that. Again, like I said, they feel that they'll find everything they need in the price. Everything will be reflected in the price. Me personally, I like them both. I think there's value in both. Sometimes you'll see short-term price spikes or drops that can't really be explained, but they're just short-term blips. But if you have an understanding of what the underlying fundamentals are of a company, you can say this is just a blip and there's more strength to it, or if this is something else. But the technicals also will tell you that, hey, I see X, Y, and Z stock falling below $50 a share. Every time it falls below $50 a share, it usually falls to $20. There's no need for me to be into that particular stock or whatever kind of investing instrument that you may be using to achieve your wealth goals. But that's just the difference between fundamental and technical analysis. So today is day 20. Tomorrow we will be back for day 21, and we will be talking about asset allocation. So remember, a couple of videos ago, between 11 and 17, I was talking about different type of investments, instruments, and how they're used. Well, tomorrow we're going to talk about asset allocation and how you kind of mix and mingle those things. Alrighty? I'll talk to you soon. Bye-bye. Don't forget to subscribe to the YouTube channel.